Hello, good afternoon. We'll understand today accounting through accounting equation. As I mentioned, accounting is a process of converting the business transactions into the financial statements, and this process of conversion can be explained through the framework of accounting equation. So in this session, we will try to see how the business transactions are converted into accounting equation. And while doing so, we will try to understand and use the various accounting standards. For example, if the business is started with cash, we say on that day the sources are equal to assets, and the sources are capital 100,000, and the corresponding source is the cash. Okay. So for the time being, let us remove these items so that you can easily see that at present you have 100,000 cash supported by capital of 100,000. The next transaction that you have availed a loan of 10%. So as a result, your cash will go up by 50,000, but there is no change in the capital, but the cash has gone up. So there is a corresponding change in the source, and that is the loan. As a result, you have, by the end of the second day, you have cash of 150 supported by capital 100 and loan of 50. Now what are you planning to do with this cash? You are using cash to purchase stock. So stock is another asset, and the stock amount will be 25,000, but because of the transaction, cash will come down by 25,000. No change in the cash, and no change in the capital, and no change in the loan, only the change in the cash. But you see the fourth one, once again you are purchasing stock of 50,000. The stock will go up from 25,000 to 50,000. I'm sorry, I should have done that in the next column. Okay, I'm sorry, let me put that once again here. So the stock will go up by 25 plus 50. No change in the cash, no change in the capital, no change in the loan, but a new source coming up, and that is called Mr. X, a creditor. Okay, and that is 50,000. So once again, your source is equal to assets. And now you have cash, you have stock supported by capital, loan, and Mr. X. Now what are you doing with this now? You are purchasing a plant. You are purchasing plant for cash, and your plant will be 65,000. No change in the stock, no change. The cash will come down because you're purchasing it for cash, and no change in the capital, no change in the loan, and no change in this X. Okay, now you're doing some operating decision. You're going to sell this stock, 50% of the stock, for 100,000. So that means your cash is going to increase. Your cash is going to increase by 100,000. I'm assuming that it is for cash. The stock will reduce by 50%. So I'm writing 0.50. No change in the plant, no change in the capital, no change in the loan, no change in X. But you observe the assets will not be equal to cash because you are selling the goods at a profit. So therefore you are making a profit worth of, we'll see that. So let me insert one more column, and let me call that as the profit. Okay, so profit, and how much profit you're making? 50,000 minus 100,000 minus 37,000 and let me increase the size of this. Okay, so let me increase it. So 62,500 is a profit that you are making. Okay. Okay. So at every point of time, after every transaction, the sources of the business or the assets of the business and the assets of the business are changing. That means the business decisions will affect the sources or will affect the assets depending on the nature of the transaction. So, however, at any point of time, the sources of the business will be equal to the assets of the business. That is why accounting means understanding the understanding the business decisions, and business decisions can be understood through the framework of accounting equation. And this example very clearly drives that after every transaction, the accounting equation will change. But what is the use of this accounting equation? Suppose I put a transaction, I convert that the last equation in and present that, okay, in the form of a balance sheet, then I'll have profit, Mr. X, loan, capital as the sources side, and the corresponding assets as cash, stock, and the plant, and that will become the balance sheet of a company. The balance sheet of a company will show the sources of the business supported by the corresponding assets of the business, and the corresponding assets of the business in this case are the cash, stock, and the plant. So accounting equation captures every business transaction. In the next session, we'll see how to convert the accounting equation into the financial statement. Thank you.